Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Monday. And we're now on the 12th of June, 2023, 7:10 p.m. Central Time. I wanted to wait a little bit, see how the grains were going to react, because the crop condition reports came out and they were negative. They lost 3% of the excellent readings in beans and corn. And you're not getting much of a pop over it. It is supportive. It's early in the season. I get it. But, most of the crop is planted in corn. Beans don't matter that much. It's a weed. It can go longer, and you got to worry about beans in July. Right now, not. But the corn market, and it didn't get much of a pop off that 3 number. Okay. Now, I'm finishing up with you today on the June stock indices. In the morning, everything will be September's. It's time to be out of these, all right? So rock and roll, away you go. First thing in the morning at 7:30, you're getting a CPI number. That number is going to rule the day, and that actually sets up whatever's going to happen, a good feel about it for the FOMC meeting. Now, by that, I mean, is the inflation number going to break in the core CPI or stay sticky? What do you define as break or stay sticky? I have that already in my report that I wrote for my subscribers. They have all my definitions of it, and away we go. But tomorrow's a key day. You'll get a PPI report first thing in the morning on Wednesday, but it's really then going to be about the FOMC statement at 1 o'clock, and then at 1:30 p.m., the press conference with Fed Chair Powell and the dot plot. We're going to be looking at that dot plot. Who's saying what? We already know that we're coming to the end of where the Fed wants to keep raising interest rates. So the real question, when you get down to the nitty-gritty, are we going to get another 25 or 50 basis points, or is that it? That's where you're at right now. The Fed believes, at least a number of members do, and they've been out speaking, that it's time to skip, not pause. The difference, they want the ability to say, we didn't say that the next move after the pause was a break. That's what people think a pause does. It leads to the break. They want to say, no, we want you to understand we really have our eyes open. We may have to go up after that. So they don't want the criticism, so they've come up with a new phrase. I congratulate them on it. It's probably a smart move. I have no idea which way this thing goes. I say that if inflation's, first of all, if it goes up on the core, they're going with the 25 basis point, in my opinion. If it comes in as expected, down, let's just say 0.2, that's the rough call. If it's more than that, let's assume it's down 3, 4, 5, half a point. Oh, well, they're going to go right instantly into your skip mode before you know what's going on. It's the, what if you're sticky? What if you're down 1/10? I don't think so. I think you got to do just what you do for anything else. That thing's not solved yet. You keep pushing against it until you got it on the run. Then you can go into your skip phase. That's why tomorrow's going to be a rough day. When you look at the S&P 500, the weekly, this thing is now back in bull territory. You have recovered 20% plus from the break low. So the naysayers here won. No other way to say it. They won. They bought every single break along the way, and they said the Fed will never stick with their program. That they didn't win. We don't know if the Fed's sticking with their program. But they won because the market keeps going up. The people that keep saying in stocks, oh, you wait, earnings are going to be terrible. You haven't seen anything. The people that are saying now we're going to get the wobbles in the labor market, or it's too strong, the market's going to force the Fed to keep going. I don't know. All I know is this. You're at a new high for this move. It's that simple. And that's where you're at. The pattern is one of a lower low, higher high. You're over all the key moving averages. And the Bollinger Band has kept the market in check. If you've taken my enhanced Bollinger Band course at iraepstein.com under the word education, repeat that for yourself. Go look at it. This has done its job in spades, all right? And what else has worked? Knowing when you have an embedded reading to be bullish, if it's a bullish reading or a bearish one, if you get it. You haven't had bearish ones, really. You've kept just bullish ones primarily. And that keeps you in the market honest and going with the trend. Now, I told my clients today, just take your money right at the end of the day, let's go bye-bye. Why? I don't want to go through a major report. If you've watched me, you know I don't believe I'm standing on that train track as that bullet train is coming and I can jump quick enough one way or the other to not get hurt. Given the size of these rallies, anything can happen if it's negative. If it's still bullish, there's time to jump back in. Okay? You still have to go through the FOMC meeting and see what they're going to do. They see that this is going on. They know the banking problems. The FOMC, the Fed knows in that meeting, they'll be discussing maybe, the three banks did go down. How far did they dare go raising rates? Do they need to push that another level? If you watched my financial update of the stocks tonight, you'll see I was talking Schwab, how it peaked out its upper band and it's all breaking down again. Part of the fear there, if the Fed keeps going up in rates, they have that issue if they got to pay more money out. You see the Interactive Broker, what they pay compared to the other firms. Well, the banks are chasing money the same way. That's the name of the game. If the Fed does the skip, there's a little relief for everybody. Dow, not yet embedded, but this isn't where the action's been. Come on, this has been a rally of 7 or 8 stocks that have carried the day, and then you get the bottom pickers stepping into a Russell that have just said to themselves, again, this looks pretty darn cheap. I'm going to go for those small cap and mid caps, and that's where I want to be. And they have gotten themselves up. In other words, a rising tide lifts all ships. But now, are you embedded here? Not yet. Are you embedded in the Dow? No. The moves have been in the NASDAQ and the S&P. Then we get to the bond market, and I'm in the Septembers. That's where you want to now be. Take a look at this. You're just riding this in a bear move. You can go either way. If the market clears today's high, right here, and we can come to that. Let me get to it. Here's today's high. If it clears 128.3, it would be a good indication that with an outside day down, if you're taking my course, that would be a rally that says you're not going to get the continuation pattern, which it is. It's going to be broken, and you probably go back to the upper Bollinger Band before you get back under that low. But it depends how the sequence comes in. In the 5-year notes, you're oversold, still very much in a downtrend. And in the dollar index, what are you? Well, the dollar index is trying to lift itself up. You had an outside day. Is the market going to be strong or weak? You tell me. If the Fed goes into the pause, you would think that you're going to see the curve yield give something up. Right now, it's trading, 84 or so, the 210s. Do we get back into the 50s, 40s? I don't know. Could be. Is that bullish the dollar? It shouldn't be. It should be a headwind to the dollar if, as expected, the European Central Bank's going to raise rates. Money likes higher rates, not where they get one that's starting to pause out. Bank of England's supposed to raise rates, not the Bank of Japan, but it's their stock market people have been buying because the cheap money makes things work that way and that. That's where the plays have been. I wish the Nikkei had good futures trading hours that made sense. They don't. So trading, it's very, very difficult. In the eurocurrency, so now I'm about to move on you, probably tomorrow, away from all the Junes into Septembers. Why tomorrow? Because I think the CPI gives us the reason to make the move. This market stops trading in the June contracts, I think on the 16th. So tomorrow's the 13th. I think we make our move tomorrow. I was going to do it today, but still the volume was in the June contract. But each day it's getting big enough where I'm ready to make the move. And where's this market? It's bullish. Barely. You have higher lows, higher highs, and you're over the 18-day average. But like I've said, you're narrowing in these Bollinger Bands where you're liable to walk away from this with a thud. In other words, you get to an upper and lower Bollinger Band and you sort of run out of momentum as the market goes, okay, what next? What would cause that? Probably the FOMC meeting combination, dot plot combination, the press conference. All three. And obviously, tomorrow, the CPI is going to be the one thing that everybody focuses on. There's a lot to focus on Wednesday, so it's easier to talk that way. The British pound had a big outside day to the downside, right against where traders probably stepping out. You don't have an embedded reading. You're overbought, hit an upside target. What are you hanging around for? That's what I would tell people. You know, it's interesting that Bitcoin and Ethereum decided to break now. They didn't break off the news of Binance and Coinbase originally, but they've gone into like a delayed reaction to the downside. In the Brent versus WTI, okay. So now you're moving out. You haven't been to this big differential like that. So are we producing that much more oil that our oil on a relative basis should be that much lower? I guess so. And for the Biden administration, come on, guys. You're getting your oil prices where you want them. You're back down into these lows here. That's where you start replacing. You're not interested in picking a bottom. You want to start your buying program and replenish what you owe. We want our strategic reserves back, not at your pace, at the pace that it should be done, which is now. And that's what I'm expecting. If you're the Saudis, you're sitting in a room looking at this going, okay, what is going on? I wrote a detailed report this morning for my traders about Russian oil, Venezuelan oil, what I think is going on. And simply put, I think Russia flooded the market. And the countries like China and other countries that were buying Russian oil, and there's plenty of them, India, I can go on, they may have bought enough to fill their brim, so to speak, and you might actually get to the point where Russia cuts production a bit right now. And the reason is lack of willing buyers, just lack of demand, not their big discount they've been offering, which will get them back into the fold with OPEC Plus, and then OPEC Plus might have to do another cut. But another thing, it is June 12th. We don't see that million barrel a day supposed cut that's coming for another couple of weeks. So you're dealing with what you're dealing, but I'm wondering what's going on. And you know the Ukrainian offensive has begun. Russia's not going to do well financially in these markets right now. They're going to go through tanks like Ukraine, as I understood. I read tonight a report out of 109, I think it was Bradley's that we sent to Ukraine, they lost 16 already. That's a lot. It's 10% of them, all right? So, you got to see what's going on here. Now they got to be replenished. I'm sure we can find them. I'm sure they're sitting at some armory somewhere. But that gives you an idea of the war. And you could see how this market is just coming down there. WTI, okay. What's the reason for not buying the oil? You're at $67. Well, what is the reason? You're going to tell me that suddenly, no, we don't have any room in the reserves again. You just said you were going to buy oil. So I don't know how the tenders went. I applaud that by the administration. They didn't tell us if the tenders were accepted or not. At least I haven't read that. But they could put out more tenders. We have room to buy it. You buy on the way down, not on the way up. I don't care if it goes to $50. You're buying on the way down. It's called a strategic reserve. What did you sell that oil in? 80s and 90s? Can't tell me you're getting financially hurt. Rebob, I've been wanting to get another pullback in the market for the July driving, but as you can see, market peaked out where? You tell me where the market peaked. You don't see the Bollinger Band top on that? One more time, just what I teach. And in that gas, I've given word here that I don't like the idea of the short side right now. This market just staying oversold. We haven't had a hot spell yet across the country. It's coming. I mean, don't get me wrong. Arizona's always hot. You know what I'm getting, but not on the East Coast. We had a few days on the upper East Coast, a week and a half or 2 weeks ago, where they did set records, but as fast as it came, it left. Now we're waiting for that summer weather. And it's not summer yet. This is still spring. I think it's the 21st of June that we enter the first day of summer. So it's coming. And the longer this market can go sideways, the better we can get a pop in it. So you put it all together, you come up with the game plan, and we're going to cover this tomorrow. We have a team that's going to be writing starting at 7:30 about the full impact of the CPI report, what it means. I don't know if you know who Dave Hightower, the Hightower reports are. They'll be out blasting orally what's going on, what they're seeing in the marketplace. I'll be writing for my clients right away what is going on, covering all this. It's going to be a day that I'm getting a good night's sleep. I'll be up as my usual early hour. I get up 3:34 anyway, so doesn't matter. And I read like a madman, and I'm ready to go. And tomorrow I'll be like an athlete, just ready to go. You want to get these reports. They're going to be important, all right? Especially with all that's going on the next 48 hours. So tell me, how do you get it? Just move your cursor to the top up here. You'll see an icon appear. Click it. You can go to our website under free offers and take as many as you want. They're free. I'm Ira Epstein. I will see you all first thing in the morning. Buckle in. I will see you then.